All right, welcome everybody. This is going to be the best order flow video you will ever watch, period. So stick around to the end while I break down order flow into 4 simple parts. Let's jump straight into it. This is order flow by Magus. What is order flow? It's the analysis of buy and sell orders hitting the open market. Our goal is to gauge the intent of these buy and sell orders and hopefully identify some mistakes from other participants. It's really easy to overcomplicate this stuff, but by the end of this series, everything will click for you. But before I can teach you how to actually use and apply flow, I need to lay the groundwork for the foundation. In markets, there are 2 types of participants. Passive and aggressive. The passive participant is the market maker that places limit orders in the book and around the price. Our 4 lessons today are around the ideas of absorption, exhaustion, climax, and initiation. Mastering these 4 ideas will greatly improve your chances as a trader. Absorption. Everybody's heard of this before, but few know how to properly use it. Absorption is when passive orders soak or absorb the taker pressure, often leading to momentum shifts. Large market orders hitting into passive resting bids. Exhaustion is when you have declining efforts from takers as volumes dry up while it's hitting into liquidity. This is why we call it exhaustion, as they're giving up. This often leads to shifts in momentum. Simple examples of exhaustion are displayed by taker volume steadily drying up and momentum being lost. The climax is when taker volume peaks, often leading to a large wick. This will spark the shift in momentum and is a solid entry signal. Not all turnarounds will have a climax, but this is a strong confluence when visible. Initiation is when market orders take over and spark momentum, seen by this large uptick in buy volume, which sparks an uptrend. Initiation is confirmation and management, but not a reason to enter, because it will often be too late. All right, so now that we have a better understanding of what we're actually trying to look for in the flow, the question on everyone's mind is, what tools do we use? This is a place where a lot of people will end up getting lost in the sauce. There's a seemingly infinite amount of platforms and type of tools you can use. So I'm gonna break this down in a very simple way so that you can apply this to any platform that you will ever use. You wanna break it down into 2 simple parts: taker flows and liquidity. For taker flows, we're actually talking about the volume or the market orders. So generally speaking, this is going to be volume, RVol, delta, or CVD. These are the most popular. From there, you're going to have liquidity. Liquidity is going to be the resting orders, right? Or the market makers. So in order to view these guys, you're going to want to use either an order book, a DOM, or a heat map. My personal preference for tools is pretty simple. I just rely on simple volume or delta and liquidity through the heat map. Honestly, most order flow is just noise. You really need to learn how to isolate the usable information. This is the part where the majority of traders struggle. So now that you know what to look for and what tools to use, how do we actually trade with this stuff? Here's a simple example of a setup I traded recently, broken down into 5 repeatable steps. Step 1 is price trading into a key region or logical zone to take a trade. Never diddle in the middle. This will reduce your trade expectancy. Step 2, identify absorption and exhaustion. This tells you the trade setup is starting to form and you want to be ready to actually take the trade now. Step 3, identify the selling climax. This is where you actually execute and take the risk. Step 4, initiation. This is how you manage the trade. This is when you know that the trade is actually going to start to play out in a favorable way for you. And finally, step 5, trading into a key region or where you see a large puke or open. This is a clear signal that it's time to take the risk off from the trade. Not every trade setup is going to be an exact replica of this schematic that we've broken down, but more often than not, it will be some version of this. If you can get good at identifying and repeating these steps, you will be a monster intraday trader. Okay, moving forward, here's our next example with both early and late setups. So let's go ahead and break these down. All right, let's take a look at this trade setup in the deltas. So you can see I clearly have my deltas broken up into spot and perps, which I always recommend. I don't really believe too much in aggregation. The first thing that you're always going to be looking for is going to be trade location. That is above all else. If you're gambling in the middle, things are not going to go so well for you. So trade location. Following that, we're looking to identify absorption. You can see pretty clear absorption coming in from both spot and perps, which leads to textbook exhaustion where the selling drops off. From there, we see the selling climax come in, which mostly comes in from perpetuals, which is exactly what you want to see. So after the selling climax from perps comes in, you lift up and deviate that. From there, you see the initiation come in from the buyer stepping up. From that point on, you start to lift price up and TWAP up. You have a little bit of a retest of the single prints, which comes in from very heavy selling across the board. From there, you mark up and the trade completes with a buying climax from short pukes. Okay, and taking a look at this same trade setup on my TradingView order flow templates, let's go ahead and run through a few things. So the first thing that we were starting to identify was the absorption side of things. So when we look at the absorption here, we notice that it's coming from a lot of shorts opening, right? Which is definitely something that we want to see, because this can lead to the fuel, which runs back the opposite direction. You will see here in just a moment. So after the shorts open, you see some clear absorption, which leads to exhaustion. Then we get the classic 1, 2, 3. Where I'm entering is when the longs puke, the shorts start to puke, which lifts price back up, and then you have the initiative longs come in, which starts the actual local trend. From there, we get a period where the these original shorts start to really unwind, which leads to a buying climax, and this is where you officially would want to be exiting the trade. Thanks everyone for watching today. If you learned something, drop a like and make sure that you're subscribed because I have a lot more education in the pipeline. If you have any questions, drop them in the comments. And if you'd like to expedite your learning curve, join the Paragon in the link below. Cheers, everybody.